Have you ever wondered how successful investors manage and grow their portfolios? The secret lies in building a balanced portfolio. But what does this mean? It's all about asset allocation. It's like crafting a well-balanced meal. You wouldn't want a plate full of only carbohydrates, right? Similarly, your investment portfolio shouldn't be overly dependent on just one type of asset. Successful investors mix different types of investments, such as stocks, bonds, and cash, to manage risk. Now imagine you're on a seesaw. You wouldn't want one side to plummet while the other skyrockets. That's where rebalancing comes into play. Over time, some investments may do well, while others may lag. Rebalancing is the process of adjusting your portfolio to maintain your desired asset allocation. It's like adjusting the weights on each side of the seesaw to keep it balanced. Remember, a well-balanced portfolio is a stepping stone towards successful investing. Ever heard of the term money making money? That's compound interest for you. It's the snowball effect at its finest, where your dividends, the earnings from your investments, are reinvested, thereby accelerating the growth of your portfolio. Picture a snowball rolling down a hill, gathering more snow as it goes. That's your investment with compound interest. Now let's talk strategies. There's short-term investing where you're in for a quick gain. It's a bit like a sprint. But then there's long-term investing, more of a marathon, where the real magic of compound interest comes into play. It's about patience, letting your money work for you over time. Imagine that snowball becoming an avalanche. So, whether you're a sprinter or a marathon runner in the investing world, remember, compound interest is your friend. It's a powerful tool in the hands of patient investors. Investing is a balance between risk and reward. But how do you manage the risk? It starts with understanding your risk tolerance. This is the degree of variability in investment returns that you're willing to withstand. Are you comfortable with wild swings in the value of your investments, or do you prefer a smoother ride? Your risk tolerance is personal and unique to you. It's based on your financial situation, goals, and even your emotions. Now, let's talk about strategies to mitigate loss. One popular method is using stop-loss orders. These are designed to limit an investor's loss on a security position by automatically selling the securities if the price drops to a certain level. It's like a safety net, catching your investments before they fall too far. Remember, investing isn't about eliminating risk, but managing it. Every investment carries some degree of risk. The trick is to know what you're comfortable with and plan accordingly. Effective risk management is key to preserving your investment capital. Investing isn't a set-it-and-forget-it game. Regular reviews are crucial. It's not just about watching prices rise, it's about staying tuned to fundamental shifts within the companies you've invested in. If a company's core values or business model changes dramatically, it might be time to reconsider your position. Staying informed about market trends and company news is vital. Knowledge is power in the world of investing, and the more you know, the better decisions you'll make. Regular portfolio reviews keep your investments aligned with your financial goals. The world of investing is ever evolving. Are you keeping up? As the financial landscape transforms, so should your knowledge. It's crucial to stay informed about the stock market and personal finance. Dive into books that demystify complex concepts, enroll in courses to sharpen your strategies, tune into podcasts for expert insights, and explore finance websites for the latest trends and tips. Knowledge is power, after all. Continuous learning is the key to navigating the dynamic world of investing. Thanks for watching. We hope you've learned from our 3-part series. Stay tuned for more, and see you on the next one.